So infinite banking also is just basically you use life insurance contracts. And life insurance, I know, is like a four-letter word for a lot of folks.
Yeah, yeah, yeah.
And for a very good reason, because there's all the stigma, all the jokes, all the fun that's poked at life insurance people in movies is very well deserved. But if you look at it from a big picture perspective, in the world of the ultra affluent and ultra wealthy, life insurance is an asset class, just like real estate. That's how they look at it in family offices, because it's not just while you're alive. The life insurance that we use in infinite banking is a very specifically designed policy for living benefits. So of your premiums, 70 to 80% of your premiums go straight towards the cash, the savings of the policy. So you have a death benefit and you have savings in there. And then, of course, the money is guaranteed never to go down, guaranteed to grow tax free. You're setting it up with mutual life insurance carriers. So you get dividends, which is around 6% right now, which is profit sharing in the company. These companies have been around for 170 years. They've paid dividends every single year consecutively for 170 years. And then you have guaranteed access to that money. So number one, yes, you're protected because there's a death benefit there. So if something happens to you, there is a death benefit. But the primary objective is to put it into a vehicle for savings so that while you're alive. So that's where the banking part comes in, as you position money in this very specifically structured policy. And then to access it, and not to get too technical, you access it through policy loans. It would be the same thing as having, I had a mentor back in the 70s that would put $100,000 in a CD in a bank account, getting 10%, by the way, at that stage, compounding every year. He would go to that same bank and say, Mr. Banker or Mrs. Banker, can I get a loan secured by that $100,000 in my CD? And the bank would say, yeah, that's fine. Because of the collateral, we have your money. We'll give it to you at 9% or even 8%. So he has his money growing in that CD, 100,000 uninterrupted at 10%. And then he can use 90% of that or 95% of that, let's just say 95K, which he's borrowing at 8% to go buy real estate or grow his business and then repay the loan. His money is working in two places simultaneously. You're doing the exact same thing here with infinite banking with a life insurance policy.